Consider the remark from the analyst at Deutsche Bank regarding their projected shortfall of a few 100,000 in deliveries for the year. It seems like a waste of energy, to be honest. You should expect Tesla to ship between 1.8 and 2 million vehicles. Since Tesla is the industry leader in electric vehicles, EVs, and since the Ford facility is currently on hold and rivals are essentially disappearing, the company will emerge from this interest rate cycle in a stronger position than the others, particularly the numerous EV rivals that require funding. Tesla is benefiting greatly from the Fed's unintentional assistance in maintaining its leadership position in the EV market. Concerned about a few 100,000 automobiles here or there, this is a firm that 5 or 6 years ago sold 100,000 cars annually. Today, it sells about 2 million, and it is projected to grow at a pace of 40 to 50% every year. That's Tesla, then. Ever wonder what will happen to Tesla in this dynamic auto industry? We might feel compelled to worry about Tesla's future as more electric vehicles enter the market each year, but do we really need to? Join us as we explore the future of this top carmaker and look for answers to this crucial question as we fast forward to a cleaner, greener energy future. Tesla embodies the cool kid at the forefront. The carmaker is developing sustainable solutions for energy storage, transportation, and manufacturing, in addition to producing electric vehicles. It reminds me of an exciting race in which Tesla is leading and everyone else is attempting to catch up. Now, there are a few new electric vehicle startups in the US that are attempting to capitalize on the success of Tesla, but let's be honest, they have encountered some difficulties thus far, and things may not go as smoothly as they had anticipated. Since things won't get any better, we believe Tesla will continue to lead for a considerable amount of time. In this video, we'll go over the specifics of this theory and talk about the business dynamics of Tesla, the one thing that sets them apart from other corporations worldwide. Now let's get started. Thus, if you're an experienced investor looking to generate revenue, now is a fantastic time. On the 10-year, income levels guaranteed rates haven't been this high in about 25 years. And let's face it, a 5% government guarantee combined with 3% annual inflation is a wonderful return on safety. However, the average annual return on the stock market over the long run is 10%. You will therefore never be able to save enough money for a long-term goal, such as retirement, if you accept 5% annually. Therefore, if I were a young investor, I would still not choose a T-bill over, example, Tesla, given that the latter has enormous growth potential in the long run. In my opinion, each investor should balance equities and bonds, and at Kerber Kawasaki, we accomplish just that by carefully assessing your risk tolerance and structuring your portfolio accordingly. What level of risk tolerance is now required for Tesla? The chart is fascinating to me. According to my amateur technical analysis, we have seen an uptrend off the lows and a decline off the highs over the past 3 years. Ross, it appears like this will either break up or fall apart in a month or so. Which way do you anticipate things going? I believe I may already know the solution. I won't, however, predict the direction in which Tesla's stock will move. Although we work around values, Tesla is still among the most highly priced stocks on the market based on its forward PE ratio. I mean, I wish I knew that for sure. With the Cybertruck debut and today's excellent Wall Street Journal article detailing how the megapacks have effectively stabilized the electrical system this summer and prevented blackouts in Texas and California, Tesla has a lot going for it. Our energy system is about to undergo transformation, and all the utilities are investing in Tesla energy battery systems. Therefore, I believe Tesla is a fantastic investment in the long run. These short-term challenges for Tesla include increased rates and plant retooling. Therefore, I don't know about Tesla if your goal is to invest for 1 to 2 months, but if it's to invest for the next 3 to 5 years, I believe Tesla is still a great choice. It's also just an expensive stock. The fact that established automakers still have a ways to go before catching up to Tesla presents the biggest obstacle for Tesla, as well as for a number of Chinese manufacturers and all other established automakers in the years to come. This makes it quite evident that Tesla is still the industry leader in terms of sales, as well as in terms of technology, demand, and profit margin, even in the face of a long list of exciting new EVs entering the market. Welcome back to Tesla Tomorrow, everyone. Within the world of electric cars and automotive innovation, there is a trailblazer that goes against the grain and redefines what it means to drive: Tesla. It's true that there are many EVs on the road and more will arrive shortly, but who has been driving this trend? Indeed, it's Tesla, the vehicle that everyone else is after. Most investors are unaware of Tesla's remarkable ascent to the top of the auto industry, which is entirely attributable to its state-of-the-art electric vehicles and cutting-edge energy solutions. On Wall Street, the rapid rise of Tesla, spearheaded by Elon Musk, is hardly surprising. Tesla is a phenomenon rather than merely a symbol. With a staggering 7,278% gain in just 10 years, this stock is a financial supernova that is enthralling investors and the market like few others. This organization has made a huge impact on more than simply automobiles. It has witnessed an extremely astounding shift towards driving and manufacturing practices that are greener and more efficient. For a variety of reasons, Tesla is ahead of the competition. Let's investigate those. But before we do, please make sure you subscribe, press the like button, and enable post alerts if you enjoy this kind of content so you can stay updated on all things Tesla. Now for the details. Not only does Tesla lead in sales, they are seeing great cash flow, demand, and technology. Why? Tesla is the best dog for a couple reasons, actually. To begin with, Tesla doesn't engage in leadership games. You are aware of how traditional automakers divide revenues with their dealers. Tesla sells to customers directly, eschewing that step. The automaker gains more revenue as a result, and FSD comes next. Since 2016, Tesla has been working on improving its FSD software, and new developments indicate that the automaker's software is growing more sophisticated than those of its rivals. All Teslas come with the technology required for fully autonomous driving. The client just needs to purchase the software to make it possible. Other than Tesla, no other automaker is even close to creating its own in-house software for autonomous driving. Because Waymo and Mobileye are not automakers, other automakers will need to license the self-driving software from another business in order to incorporate this technology into their own vehicles, which will undoubtedly raise the price of the vehicle. Tesla's FSD positions it on the vanguard of the recent AI evolution, and it's only going to go up from here. This is because, according to Tesla bull Cathie Wood, the automaker is a hidden treasure among AI-related businesses. Wood also believes that the companies with the greatest private data sets will stand to gain the most from AI technology. In an earlier interview, Wood claimed that Tesla possessed the world's greatest collection of actual driving data, and that the business also possessed a greater quantity of data that will prove useful in the future. Let's take a brief moment to discuss numbers. According to Cathie Wood, knowledge workers will be 4 times more productive by 2030 thanks to AI. Even Aorake Invest, her company, believes AI has the potential to make trillions. And who's best positioned to profit from this? Yes, investors in Tesla. Additionally, one of Aorake Invest's most eagerly awaited Tesla projects is the robotaxi. The company is rather excited about the robotaxis that Tesla is releasing, claiming that by 2030 they may generate trillions of dollars in income. That will add up to a significant sum of money. According to the firm, in 2027, Tesla's robotaxi business is predicted to contribute 67% of the company's expected enterprise value and 64% of its planned EBITDA. There are further factors. Additionally, even though Tesla EVs have much lower margins than robotaxi, it anticipates that they will account for 47% of sales in the same year. Here's the lowdown though. Tesla still has some work to do even though they're sitting pretty. The first is battery technology, and it's a significant one at that. Particularly with the Model S and Model X cars, Tesla has achieved great advancements in battery technology. Despite this, there is still room for progress in this field, so there is no reason to be afraid. Tesla can make its cars more efficient and have a longer range by enhancing it. This will not only be appealing to customers, but it will also assist Tesla in adhering to the stringent global emissions standards. It's that easy. Better batteries equate to longer drives, satisfied consumers, and a checkmark on the global environmental checklist. For electric cars, batteries are similar to the magic ingredient. Without a question, there are a lot of interesting EVs available. Right.